Welcome, listeners. You're listening to Deeds in the Desert, the place where real estate investors tune in for the latest news and available investments at Ignite Funding. If you're on the hunt for a low-effort, passive income stream, then turn up that volume and pull out the hammock as we get ready to feed you your weekly dose of real estate investing insights.
Welcome back, listeners, for another episode of Deeds in the Desert. My name's Izzy Razari, and today's guest I have here is, she's back actually again, Kate Buda, Business Development Exec. Thanks for joining us today.
Thanks for having me.
So the reason why I asked Kate to come on today's episode is because what we're going to be talking about, and that's why trust deeds belong in your portfolio. And I think Kate's the perfect person because she actually just got off a phone call right now, actually about 20 minutes ago, with a potential investor talking about why trust deeds are a great avenue or a great investment to add to any portfolio. Mm-hmm. So let's jump right into it. So let's talk a little bit about trust deeds and the typical people that usually come on board or the people that reach out to us on the Ignite Funding side. So typically people are just looking in general for different investment types. They're usually stock investors. I mean, when people really come to us, they're the stocks, bonds, mutual funds, a lot of the quote unquote basic types of investments that people learn about from either an early age or the things that they see in movies is they think of stockbrokers basically. But that's not us. We're really not even correlated to the stock market. We have really nothing to do with it. Since what trust deeds really are, it's a real estate investment. And can you give us a really quick little rundown? What is a trust deed, Kate?
So a trust deed is an investment on a property, right? Borrowers come to us looking for lending for projects in commercial real estate. They could be, developing 100 apartment units, medical facilities, whatever it is that they're looking for lending for. Once it's vetted, we release it to our investors, and you are investing in that piece of real estate. You are essentially becoming a lender for that loan. The important part on that is you are actually listed on the deed of trust. You have a tangible asset attached to your investment because you're listed in a first position. Something
you don't get in the stock market?
You don't get that. A first position on that deed of trust, and that way, that's your safety net. Mm-hmm. If a borrower ever stops paying, Ignite Funding is going to go and foreclose on that property to make sure you don't lose your principal investment monies. Now, you lose money in the stock market, who are you going to complain to? You're not getting it back.
So yeah, that's pretty much the nuts and crux of the trust deed. I think there's one other thing that people hear a lot of now. I think it's becoming more of a popular word, which is alternative investment. It's something I've heard over the last 5 to 6 years, and I think people are really starting to understand what that is. And it truly is an alternative investment to the typical investments that we see, like the stocks, bonds, and mutual funds. This could be anything like for what we do in the real estate side of things on the trust deed notes. It also can be like precious metals, digital currency, oil and energy. That's basically what your alternative investments are. But I'm actually going to talk a little bit more about what we do and why it's probably one of the better alternative investments compared to the other ones I had really talked about. So we're going to tell you about 4 reasons why you should invest in trust deeds today and what they're able to provide to you. So the first one is higher returns. So for those that don't know, trust deeds typically offer higher interest rates than traditional investment options like your stocks and bonds. This higher return potential can also help boost the overall performance of a portfolio that's, let's say, getting a stagnant 6-7%. But I know there's people out there listening, I'm getting 16%, I'm getting 17%. But what do we always ask people? At what risk?
What risk?
Exactly. Mm-hmm. And so what are some of the things that you do talk to people about? Who you just talked to some leads actually last week that were talking about, I'm getting this percentage. What do you tell those people?
Well, I tell them to look at what they're actually invested in. A lot of those people that are getting those higher yields, they're not in a first position. They're in a second position.
What do you mean by that?
So on the loan, just like your home mortgage, right? Let's say you have your primary mortgage company and then you take out a second on your home. If something happens and they foreclose on your home, the first is the only one that's getting paid back. That second is essentially completely wiped out. The same thing happens here when you're investing in real estate. The people that are earning these higher interest rates a lot of times don't know that they're in a second position on a loan until something happens, the borrower stops paying, they have to foreclose on the loan. They call the company that they're working with and say, okay, what now? What do we do now? And they tell them, you do nothing. You just lost all your money. You were in a second position. That's the risk you take for the higher yield.
So reading the fine print is important, is what you're saying.
It's very, very important. And I always tell the clients that I deal with and that I talk to, there's several questions that you have to ask. And one of those is always, is it a first position? What is the recourse that I have if a borrower stops paying? And if that lender or whoever you're speaking with can't answer your question, you need to hang up the phone and call Ignite Funding.
Oh, I like that. All right. We should probably clip that out. That was pretty good. But yeah, that's what's probably the most important thing, reading the fine print and asking those questions, because if you're not getting those questions answered, then, what are you really investing in? Mm-hmm. Another reason why you should add trust deeds to your overall portfolio is diversification. And what we mean by that is diversifying yourself outside of the stock market. I'm not telling you to go out there and liquidate all of your stock right now. That'd probably be dumb to do that, but just don't do that. Diversify. Don't put all your eggs in one basket. You've probably heard that if you're listening out there as an investor, you probably heard that your entire time being an investor. But how many people really listen to that? Because I hear time and time again, oh, I had all this over here. I put a little bit over here, but I didn't dabble. And you didn't listen to what you're telling people out there. You really should diversify. And the cool part is, I'm actually going to let Kate talk about that. Not only are you diversifying your portfolio by investing in trust deeds, but can you tell people how they diversify by investing at Ignite Funding in the trust deeds we offer?
So when I talk to our clients, we offer so many different varieties of investment opportunities with our borrowers. So you should be looking at investing in different asset classes, different borrowers, and even in different states. You can have two investments with the same borrower, just make sure they're in different states.
What do you mean by asset classes? You said something earlier. What is that?
So you can, in these loans, it can be land acquisition, meaning that borrower is purchasing a piece of property that they want to develop. It could be a development loan. So they're in the development phase of their project, meaning getting their permits, zoning, supplies, all of those things, or construction, vertical construction. It can also be renovations. So if they're buying, let's say, a retail property and it needs tenant improvements, right? That can be one of those loans. So looking at all those different classes, all with different borrowers, and making sure that just like you do your stock portfolio, you're diversifying your real estate portfolio.
And once again, to reiterate, I said a little bit earlier on the episode, is that trust deeds are not directly correlated with the stock market. So what they're able to do is provide a more stable income source even during market downturns. And that's actually something I don't want to get too much into, but that is one thing I do want to just talk a little bit about is the market downturns. People always ask us, well, why are you in this city? Why are you in this state? How could you go into retail right now? Or just all these very certain specific things, and it's because of what they're hearing on the news. Mm-hmm. And the one thing I always tell them is that if something was to occur like that, where our investments are so short term that it would allow us to pivot in and out of that market. And that's kind of what we do. That's what our director of underwriting and his team does, is they look at these little things that are happening into these small economies and making sure that we are in a good position. Because the one thing that people probably don't know about this, and that I don't think we speak enough about, is that if investors aren't getting paid, we're not getting paid.
Absolutely.
We need the loan to perform just as much as they do.
Yep, absolutely.
So let's talk a little bit about what you had touched on earlier, which is collateralized investment. Let's talk about that, because I think that's probably one of the most important things. The returns are great, diversifying is great, but the collateralized investment, I think, is something that people need to understand on how that securitizes their real estate investment with us.
So when you're listed on the deed of trust in a first position, right, and a borrower stops paying us for any reason, our investors have that recourse. Because you're on that deed in that first position, Ignite Funding is able to go in, foreclose on the property, take it back, and turn around and sell it. That is the tangible asset. It's the property.
So we do all the heavy lifting for the investor.
Exactly. Absolutely. We'll hire the broker. We put the marketing behind the property. If there's taxes or maintenance fees, for example, that are owed, Ignite Funding is going to front all that cost for our investors to get that property sold and recoup their investment monies, their principal investment, as quickly as possible.
And for those out there that are listening that really want to understand how good our track record is and understand what we're able to do, you think we're good when our loans are performing, but you want to really see what kind of company we are, check out what we are able to do when a default situation happens, when a foreclosure happens. We are there every bit of the way, making sure that we put the investor first. And I think that's something that's so important. So if you do want to go check that out, you can go to ignitefunding.com, go ahead and click on the performance record. It details and aggregate everything that we've done since 2011 all the way through to the quarter one of this current year. So let's talk about the last reason why people should add trust deeds to their current portfolio. Passive income stream. What does that mean?
That means a lot of us used to refer to it as mailbox money.
Right.
Right? We don't have mailboxes that much anymore. So those funds are going back into your account on the 15th of every month, the interest that you're earning on your investment. So that 10%, for example, on your investment monies, we process it on the 15th. You're receiving it every month. What you do with it is up to you. Some people use it to supplement their income. Maybe they're getting ready for retirement and they need, a little extra coming in. A lot of people use it for that. Maybe they have to take a distribution. There's a lot that can be done with that passive money that you receive every month.
So for those out there listening, you don't have to wait quarterly, you don't wait annually, you don't have to wait an extended amount of time to start receiving those monies. You're getting those interest payments every single month. And as Kate briefly talked about, it is a great option for those investing in IRAs, specifically self-directed IRAs, which allow you to invest outside of the stock market and invest into alternatives like the trust deeds. And I mean, who doesn't like investing tax-deferred or tax-free, right?
Right. Absolutely.
Well, that's pretty much it for today. Those are the 4 reasons why we feel investors, any investor out there, we don't consider ourselves an investment for the ultra rich or for the even just the beginner. I consider us a perfect investment for the everyday investor. Again, thank you for all the listeners out there. We really enjoy the opportunity to educate you guys here on Deeds in the Desert. And I just paid attention to the date today. I can't believe it's actually been 1 year since we've been on Deeds in the Desert. Can you believe it? Who would have thought we would have made it? Yeah, that's awesome, right? So I'm really excited. So all those listeners out there, you guys can go ahead and check out all the previous episodes we have on Deeds in the Desert. Go check us out on ignitefunding.com. If you're on Facebook, Twitter, LinkedIn, or even on TikTok, we're trying to stay cool with everybody out there and try to stay ahead of the curve. So, hey, you never know. We might be in your city. We travel a lot to different types of events, educating investors all over. So thanks again, Kate. We'll catch all those listeners on the next one. Thanks for listening to Deeds in the Desert.
Thanks for joining us this week on Deeds in the Desert, where short-term investments meet long-term investors. We hope you enjoyed the content so much that you share it with all your friends. Who doesn't like learning about passive fixed income, right? Still hungry for more education? Visit our website at ignitefunding.com. Or if you're ready to take the leap and start investing, give us a call at 702-761-0000 and schedule a free investor consultation.